So yeah, welcome everybody. Thanks for joining us for another DeFi Raiders AMA. We're here uh, with Patrick from Stasis Network. Um, yeah, and Stasis Network is an on-chain mutual fund with a deflationary token. The goal is to create sustainable, customizable passive income for holders by increasing the Stasis treasury value and reducing the number of tokens in circulation. So yeah, I look forward to learning more, and we'll capture all the attendees for whitelist later. I imagine we'll just take some screenshots along the way and perhaps give them to anybody who appears in 2 or more screenshots or something like that, so we don't have people just popping in at the end.
Yeah, of course, that's fine.
Cool. Well, awesome. Well, good. Thanks for joining us, Patrick. So get us started. I know you were just doing it, but if you wouldn't mind once again for the recording, tell us who's on the team and what what kind of skills or backgrounds you all have, and how you all met and decided to launch Stasis.
Of course, yeah. So my name is Patrick. I'm the CEO and founder of Stasis Network. Stasis Network is a child company of Block Central Inc., based out of Panama, and we decided to put together something based on proven mechanics, because we do have a proof of concept that we wanted to kind of give people another option that they could depend on, something that was sound from a foundational point of view, and then obviously how we run things will be essentially our secret sauce. I always tell people, our innovation is going to be our execution. And so what we're doing, and you kind of said it when you introduced us, on-chain mutual fund. It's very simple, and yet because we're in this space with a lot of 20-something engineers who might not have a lot of business experience, might not have a lot of money management experience, or simply just don't have a lot of life experience, a lot of times great ideas end up lacking in execution. And so we're hoping to fix that. But for me personally, I've been in the crypto space 9 years. Actually, I've had this question so many times. I went back and I found an email, and I'm going to share it here, of, if I can, let me see. Maybe I'll do it in the AMA chat if I can. I cannot. Let me see. Nick,
let me give you the role. Yeah, 1 second.
Okay. All right. Because because a lot of times when you're doing an AMA, you're saying a lot of things that you do, your experiences, and our whole angle with Stasis is hitting a certain level of transparency that no other project hits. And so what I wanted to do is I wanted to show in the chat, I'll do in the Raiders stage chat, a screenshot of an email from June 27th, 2014. This was my first purchase into crypto. And so I left the Gmail partially obfuscated so nobody tries to social engineer me, phish me. But you can see it's my initials and then my first 4 letters of my last name. But that was my first purchase into crypto. I spent $19 and I bought 50,000 Dogecoins. In fact, reflecting on this, I think this particular wallet, I had so many wallets because I was playing the Doge faucet game where I was just going around with like a dozen wallets collecting Doge from faucets. And I think this particular wallet, I actually lost the private key to. So someone could, if they wanted to, track down this date on the blockchain. If there's like a top wallet, like listing of wallets, they could probably find this 50,000 Dogecoins just sitting in the wallet still 9 years later. So we try to strike this level of authenticity and this level of transparency. And so I wanted to show that because, people can say they've been in the space X amount of years, but do they have proof that they've been in the space this long? And so I went and found that email this morning and I was like, I think we should show this because we just try to hit that level of transparency. So, but I've been in the space 9 years. I have a bachelor's in business and economics. I have a master's in administration. I spent a lot of my real life experience in management roles. I've basically been managing teams of people since I was 18 years old. So the moment I got to college, I got a job working actually in the rec center of all places, and would manage teams of people for intramural sports, for operations, for facilities. And I just kept doing that in my real life, and so a big part of my focus as a person is psychology. It's a lot of sentiment. It's a lot of management. It's a situational leadership. We talk a lot about the inverted pyramid of leadership. And so that's something that I believe in strongly, and we apply it to how we operate. At least I do in the real world, and we're applying it to how we operate in Stasis. So besides that, I am a writer. I've been a writer basically my whole life. Short stories, screenplays. When I got into crypto in 2014, I started writing technical documents for projects, little articles. I kept writing articles. So if you were to search Peasant for Hire on Google, you're going to find articles from me dating back to at least 2017, 2018. And then that transitioned into obviously project leadership. But also day trading is another big part. If Austin Clark is around or Andrew from Apex Trades, there's a lot of people in the trading community who know me well. They've seen me in action. They know what I can produce as a day trader. So there's a lot of applicable skills to this particular idea of a project. So that's kind of my background. Barry, who is my co-founder and COO, he's been in crypto about 7 years, and he has a very construction project management background in real life. So for the past 20, 25 years, he's run his own company where he'll do full renovations of estates in Ireland. Basically every Apple store in Ireland, he and his company had built, and he was the project manager over those. So he does a lot of multitasking, a lot of coordination with contractors, a lot of money management on the back end when it comes to accounting and stuff. So he fits the role perfectly, because he told me the other day, he goes, if anybody asks why I don't do AMAs, tell them my accent is thick and I talk too fast. So he has a very thick Irish accent. But so Barry and I are the kind of the two-headed monster of the project. And then we have our three directors. Michael is our operations and community director. He is called that specifically, so his acronym can be OCD. That's just who he is as a person, and he loves it. He has a finance background, both education, and he worked for a top 3 financial organization where he held, I think, 5 different series certifications. He's like a spreadsheet nerd. Like if you imagine like Steven from the dojo, DeFi dojo, like one of his sons, that's kind of who Michael is. So he's a big spreadsheet nerd. He's a big yield optimization nerd. He's heavy into analytics. He also trades both DeFi and TradFi. And so he's going to help us with not only managing the community, but also helping advise on how we manage the mutual fund. And then Ian is our marketing director. Literally everything that you see from a design standpoint, Ian has touched. So our branding, our website, our NFTs, literally everything that we have as a brand image is something that Ian has created. He's done a great job of taking our vision and bringing it to life. So he works in B2B, like contractor work for marketing, tons of Fortune 500 companies he's done contractor work for. He's a wizard in design. He works fast and incredibly high quality. And then Brent is our external relations director. Brent has a long history. He's a real world serial entrepreneur. I know in crypto, people will use that term and it doesn't really mean anything, because what that really means is they jump from focus to focus every year and they call themselves a serial entrepreneur. But in real life, he's built 4 companies over the last 30 years. His last one was a technology staffing in like payroll company that he built over 13 years and sold during COVID. So he's in his early 50s. He also used to hold a couple series certifications for the financial sector. And he's incredibly well connected both in crypto and outside of crypto when it comes to his network. So he fits the mold perfectly for that external relations person who kind of just goes out, builds relationships, talks to people, introduces them to Stasis and kind of what we're building. So that's the core 5 team members. So Barry and I, how we met is Barry and I were originally, we had met in a crypto research Discord server in late 2017. Think like intelligence on chain, but without the intelligence. And so Barry ran this crypto research server where a bunch of people who were tired of getting ripped off by bad actors kind of got together, and they would start calling out bad projects and then being only involved in good projects. And so that's how I kind of met him. We worked on a couple like little very rudimentary investigations, and then we got to know each other, and then we've been working together off and on basically ever since. And so we kind of meshed well from that standpoint. The rest of the team, all of us are heavy investors into Make DeFi Better, MDB, which is our proof of concept for Stasis. Our foundational protocol is based on about 80% of that protocol when it comes to its base level features. And so we all kind of coalesced around a shared mindset of wanting more out of this space. Like, we as individuals have very strong opinions about the space, especially Barry and I, because we've been in it for so long. And it's great as individuals to have those opinions, and we can affect change on some level between our networks. But we kind of got to the point where people would say, over the last year, people would say, we don't have anything to invest in. There's no teams that we can trust besides the few that already exist. There's just not a lot of opportunities to diversify. And so we kind of got to that point where we had like a Thanos moment where we're like, all right, we'll do it ourselves. Like we'll take these ideas that we have, these opinions that we hold for the industry, and we'll institutionalize them. Because as an institution, we think that will cause an amplification. Like, it's great that we have these philosophies, but to prove that they can work in a project, in real time, in an actual like active protocol, I think would be very powerful to legitimize some of these beliefs that we hold in the space. We believe they're right, but I think in action we can prove that they're right. So that's how the team in general kind of met, and how we kind of coalesced around this idea of Stasis and what it could mean for DeFi in general.
Very cool. Great answer. Thank you. You even headed off a couple of my follow-ups there.
Okay.
On, but I appreciate all the background. That's great. And I was going to, of course, ask what everybody's relevant financial and trading background was, but I think you covered that pretty well. And I'm familiar with MDB as well.
Yeah.
So yeah, very cool. And I'd like to just highlight what you said early on there that your innovation is your execution, which I love. And if you want to talk a little more about that, I'll give you the opportunity to.
Of course. So at the end of the day, what we're trying to accomplish is not something you would normally see in the DeFi space. A lot of what you're seeing is like concentrated liquidity and these complex lending platforms and liquidity wrappers and all this other. It's great stuff. It's good products, but 98% of the world, 99% of the world has no clue what they're talking about. And what we're doing, and I have this is one of the beliefs that I hold within the space, is the way we talk about the space is self-defeating, because our goal should be a shared goal of mass adoption. We should want as many people in the world to be interested in, invested in, and participating in crypto, in blockchain, in digital assets, in DeFi. However, in practice, a lot of people we live in this echo chamber where we use a certain vernacular, where we use a certain set of terminology, that if you don't stop and think about it, you don't realize that you might actually be alienating literally everybody else, because they just right off the bat don't understand what you're saying. And so while from an ego standpoint, you might feel smart, you might think you're portraying yourself as intelligent, but really what you're doing is you're alienating basically everybody around you. And so for us, we wanted to go the other direction. We wanted to take the simplest idea from TradFi, one of the simplest ideas, a mutual fund, and we wanted to find a way to build a brand narrative that we could apply to digital assets, that we could apply to DeFi, and start the process of building this bridge between the masses and us. Because if we want mass adoption, we have to talk about it in a way the masses will understand. We have to make it accessible. And a lot of times when people think about accessibility, they think about, oh, well, we'll make our platform really easy to use. Well, that's one part of accessibility, but the other part is you have to make it easy to understand. And so for us, like, we spent 4 months, 5 months building meticulously our DApp. I think our DApp is going to be one of the easiest to use in all of DeFi because of how we streamlined and explained everything and how we set it up. But we still have to be able to explain to people what a mutual fund is, what an on-chain mutual fund is, what single staking is, what farming is, what STS Plus is. So it's still DeFi heavy, but we're at least starting that process. Because I always say, when you build a bridge, you're building it from two sides. So for us, this phase 1 of Stasis is on this side of the bridge. We're simplifying DeFi as much as possible in its current state. And then at the same time, we have our marketing firm, Lunar Strategy, putting out press releases, establishing the brand identity, letting more of that TradFi audience know that we just simply exist. And so through that, we start to build that bridge. But at the end goal, phases 2 and 3 and beyond of Stasis, is going to be meeting somewhere in the middle. We have to move to them as much as they're going to move to us. And so through that, we hope to be able to open up the space a little bit more. We hope to grow the borders a bit more, because a lot of times you just end up recycling old capital, and then you don't end up actually growing anything. You don't actually end up building anything. And so for us, we really wanted to take the time to say, all right, how do we start this process, and what's our long range goal? And that's been kind of that point throughout all of this, is being able to say, okay, what's the biggest problem with DeFi? It's not the earning potential. We think the earning potential within crypto and DeFi is far superior than TradFi on average across the board. Okay, how do we make that attractive to people who are crypto curious, to people who are TradFi that dabble in crypto? And how do we bridge them? How do we bring that TradFi tradition to to what I call the DeFi dominance? And so that's our whole focus is for myself, as a writer, I've always written in a layman's perspective. Even though I understand it technically, I need to write it in a way where if my mother were to read an article or my wife were to read an article, they'd understand at least half of it. They'd have some sort of solace in knowing that they understood at least a portion of it. And that's where you kind of start. You got to go meet them where they are and then bring them along. So that's been a lot of what our focus has been when it comes to building the brand narrative and kind of our next steps when it comes to building the protocol overall.
Yeah, very cool. So what do you think is the biggest problem with DeFi then? Certainly not the earning potential.
Certainly not. No, I think it's the accessibility. I think as project leaders, as leaders in the space, I think ultimately we need to simplify the way we speak about the space. I think we need to simplify the way that we present the space to others. Otherwise, it is the truest sense of that zero-sum game. Crypto is some form of zero-sum game with game theory, but within DeFi, if we don't make it concerted effort to grow the borders, to introduce new people to the space, which inadvertently will introduce new capital to the space, it is an echo chamber of game theory and zero-sum game. And we're just literally just reshuffling each other's wallets in different amounts at that point. And so we have to do better. And I think it would be advantageous for everybody if more and more projects were like, okay, give me the simplest product you can come up with that will earn money or earn revenue, and then let's simplify that. And so while it's great that certain projects are innovating and they might have a small target, not everything is for everybody. There's certain projects where they only focus on $1 million plus liquidity providers. That's great. That's their target market. That's their product. It makes perfect sense. It's the same thing as when a company builds a certain machine or robot for doing surgeries in hospitals. Obviously, the general public is not their focus. And so, but for us, if we want to actually grow the retail borders of this space, because we have mass adoption on an institutional level, but we also want mass adoption on the retail level. And so that's kind of where we come in, and is how do we focus on growing that accessibility? So I think that's probably the biggest issue with DeFi, besides the fact, the obvious of bad actors who are anonymous, who lack any sort of management or leadership skills. I think the structural issue with DeFi is the accessibility and how we onboard people into the space.
Perfect segue. So now let's talk about risk, because that would have been my answer, right? Is that it's risk, and that it's almost impossible to box risk in DeFi still. And I'm talking not, obviously not just about bad actor risk or transparent bad actor risk, but things that can be murkier, right? Like multi-chain router 2 just came back up, so Kava's stable coins have restabled themselves, but there's a major event where for a week or more, multi-chain, which is completely centralized, didn't have access to, I think, 2 or 3 of their 5 or 6 routers.
Yep. Yeah, the risk thing is something that you come to live with in crypto, right? It's like the entire industry is technically a risk asset. Obviously, there's different spectrums of risk within it, but if you're zooming out 30,000 foot, like all of digital assets, Bitcoin included, is classified as a risk asset, and so the idea is how do we tear down the perceptual barrier of risk by pointing at historical price, like I call it like a maturation cycle. Like as we mature, the percentages gained and loss will become less and less volatile. So like even if you look at Bitcoin in the last 2 cycles, from 2013 to 2017, you're looking at an 11,000% gain from all-time high to all-time high. But then from 2017 to 2021, you're looking at a 230% gain from all-time high to all-time high. That's in relation to the history of the price. That is itself maturing from a market standpoint. So for me, when I look forward, I wrote an article about this called Bitcoin's False Spring. Projecting forward, I don't think Bitcoin's going to do much more than 100,000. I said the next high in late 2025 is going to be 102,000. And so I think as the market matures, that volatility and then that perceived risk is going to become less and less. So I think what it is we as a space need to add context to that conversation of being able to point to real world assets and their history as they go from infancy to maturation within their life cycles, and then be able to apply that to crypto and go, look, Bitcoin did this over, and then this, and then this, and then here's what we're projecting it will do in the future. As each halving comes through, we're going to have that natural maturation and flattening out of both price volatility and just overall value in general. So I think as we go forward, what it is we have to look forward. So like if we're trying to onboard people and we're talking about risk, we can choose to look at history and see the negatives, or we can see the trend that's forming through history to the present, and then how we can project that into the future. Because those people aren't going to be participating in crypto in the past. They're going to be participating now through the future. And so how do we tell them and communicate to them that moving forward, risk will continue to become less and less against the average of what you would see in crypto in general. So I think ultimately what you're talking about is a huge issue, and I think it's another barrier to entry. But I think the way we talk about it and the way we set the narrative and the way we communicate to people, I think we can overcome a lot of those barriers.
Yeah, that makes a lot of sense. So what kinds of structural steps would you take in terms of portfolio risk management, right, to insulate yourself from those sorts of contagion events, right? We also now have the SEC going after Binance, which of course I think is bullish for the industry, because that means they're that someone's scared.
Yeah, I think it's bullish too. Like in fact, I have a trade open right now on BNB because the market always overreacts. It's like when USDC depegged, structurally, because of the money that was in the SBV, the bank, should have only caused it, if it was lost, to depeg by 3 cents, 5 cents at most. And so when it went below 90 cents. I was like, well, this doesn't make any sense. So I bought a bunch of USDC, and then I made a bunch of money off the arbitrage. And so a lot of times we can trade the overreaction, because there's always that moment of the irrational that will take over, and that mob mentality within the industry. But for us, when it comes to managing the mutual fund itself, we look at it as 85% of it is going to be what we consider safe or very safe. So we're talking about farming stable pairs like USDC, USDT, or farming like on Uniswap V3, like farming wrapped Bitcoin, wrapped ETH. Naturally, the IL on that pair is relatively low, and so we have an opportunity to use Lido, Stater Labs, Aave, and Curve and Convex. We have a lot of different opportunities to spread out the portfolio, both in different platforms and different assets that we consider to be relatively safe. Now, naturally, there's only so much you can plan for, right? Like it's like launching your project on an L1 or an L2. If the L1 or L2 fails, then you're kind of SOL. And it's the same thing with a lot of our plans with the mutual fund. Is we're focused on self-custody, we're focused on yield bearing, specifically what we consider blue chip assets, those like top 50, top 75 assets that have been around, have a proven track record, and have shown significant health, especially through macro market movements. But still, you have to relinquish some control to gain the yield. And so for us, a lot of what we're looking at is about 85% is going to be in what we consider those safe blue chip yield bearing sort of strategies that we can protect the capital. Almost all of it's going to be still in our custody in some capacity. So we're not going to be putting any money into like platforms like Freeway or Yield Nodes or some sort of non-controlled trading bot situation where we don't have access directly to funds. So we're avoiding those situations, and we're focusing purely on stuff that we're hoping to get about 20 to 30% per year growth, not counting delta change. So the key for us is we believe we have a launch window now where we can launch 9 months before halving, lead up into what we consider to be the most fruitful next 18 months in the market. And so even though the fund itself, when it comes to its yield, is 20 to 30%, the underlying assets within the portfolio, we anticipate to increase 5, 10, 15x in fiat value through that process. Obviously, all of our projections are very low and they're very conservative, but our whole angle is under promise, over deliver, right? So that's kind of our focus when it comes to managing risk. Is we accept that all of it has some inherent risk, but what we can do is we can compartmentalize, both based on specific assets, specific pairings, specific platforms, where we can kind of spread out and make little partitions to protect ourselves from any major contagions, but also at the same time, we have a strong sense of where the market's heading in the next 18 months and how we can capitalize that on that safely, and so that's kind of where our focus is from managing risk. How do we make different baskets of risk? Nothing that we're going to be doing is going to be considered very risky. There's nothing in the market that would dictate needing that right now. At some point in the future, during like the euphoria of the bull market, it would be advantageous for us to allocate a small portion of the fund for pre-sales, vetted pre-sales, where basically in that moment you can throw money at anything and it'll make a 5 or 10x. At that point, it would warrant the conversation that we could participate in certain activities like that as a fund, as arbiters and stewards of that capital. But right now, there's no way we would do that. but again, that's the beauty of us with our experience in everything that we do, both as long-term investors, as traders, as people who are highly involved in analytics and focusing on optimization. We can read the market And I always tell people, there's that saying of time in the market beats timing the market. And for the most part, that's true. But I also believe that time in the market helps you time the market. So if you've been in this space for a while, you can lean on that experience and that wisdom that you've gained through these cycles, and it can help you see trends coming. It can help you see problems coming, and then you can mitigate any contractions or amplify any gains through that process. So that's kind of where we're coming from an actual like management of the portfolio.
Yeah, great answer. And you headed off another one of my follow-up questions. So would you think about eventually? Well, I guess you will. You'll have everything reasonably accessible. So if there was another trivial depeg event where it was obvious that the stable coin was going to repeg, you could take advantage.
Yeah, of course. Like, well, that's the beauty of our system, right? Is this market moves so fast, and people ask us, like, are you going to be a DAO? Are the investors going to have a say in the decision making? The answer is no. We're not going to be a DAO, but yes, we're going to give investors a chance to share their ideas, share their opinions, and then ultimately we will consider them. I talk about the inverted pyramid of leadership, and our job as leaders is to support the team. The team supports the users. Well, on the other side of that, the users give feedback. Feedback flows down the pyramid to the team, to the leadership, and it's our job to consider it. Is it in line with our ethos? Is it a good opportunity? What are the risks? What are the strengths? And then how do we implement it? Is it realistic that we can implement this now? What's the cost basis for implementing it? And even if it's something where it's an investment, where if a community member were to come to us, be like, hey, this new perps platform just launched. They don't have a lot of TVL, but I did all the research on the team and the build, and everything looks strong. They haven't hit the like macro market from a marketing standpoint. You should maybe see about allocating part of the mutual fund for providing liquidity on this perps platform. We could do that, and the beauty is because we're not a DAO, we don't have to wait for 3 weeks for a proposal to be approved. As the stewards of this capital, we can go in and be like, all right, we're going to allocate 1% of the fund to this platform providing liquidity after we do our due diligence. So it's stuff like that where will the community have an opportunity to share their suggestions? Of course. In fact, we've already implemented 2 of them before we did our pre-sale, before we did our launch. And so like we're listening and we're always going to consider what people have to say. But at the end of the day, we are in control of what's happening for the platform in itself. And so we just want to make sure that we strike that balance of being able to be adaptive in a fast moving market, but also being considerate to the fact that everybody has an opportunity to share ideas, and great ideas can come from literally anywhere. So there's very little ego in this team. Like I go by a certain username on purpose because I think it's kind of ironic and funny, but it also sets the stage for like, we don't like go out of our way to make people feel like we're better than them. We just want to execute a really clean plan. And as we collaborate, we all have blind spots, and the more people that we have in our circle that can cover our own personal blind spots, the better off the protocol will be as a whole.
Yeah, it makes a lot of sense. And I'd probably argue that even for DAOs, it makes sense to delegate, treasury management and investment decision-making down to as few people as possible.
Yeah. DAOs are great in theory. Unfortunately, in practice, either they are a very slow moving machine that does not adapt fast to market conditions, which in this space, as you can see, market conditions can change in a matter of minutes, let alone days or weeks. And then the other thing is they are subject to mob mentality, where you can have a few large holders. If they just change their opinion on something, no matter what you do, and you can't change their mind, you open yourself up to either people acting irrationally or simply just a short-sighted decision that might seem good in the short term, but long term, using some level of contemplation and forethought, it might actually not be good at all. So there is something to be said about keeping less chefs in the kitchen, shall we say, and so It's one of those things where we talked about it, and we came to a conclusion pretty early on that we needed to be able to move swiftly and adapt quickly, and we couldn't do that if the decision making was more decentralized.
Yeah, makes a lot of sense. Well, good. So now why don't we get into the actual tokens and the dApp?
Yeah, that's great. So we have 2 tokens in the protocol. The main token, which is the Stasis Network token, STS, that is what we consider the medium of exchange. So traditional mutual funds, the medium of exchange is the US dollar. You give Scottrade your US dollar and they put it in a mutual fund, and you benefit from that. The problem with that is you pay 2% MER, and then you'll pay another 5-6% a year in inflation, because they can just print US dollars forever, and your money's always losing value. For us, the medium of exchange is STS, which is a deflationary token. We anticipate burning about 25% of the supply in the first year, and then we will continue to burn as the protocol matures after that. And through reducing the supply. Now, it's important to remember, deflationary doesn't mean the supply goes down. A lot of protocols in this space will use that term incorrectly, but they're missing a key component. Like, if your supply is going down and your price is going down, you're not deflationary. You're just you're not. Economically, in order to be deflationary, your purchasing power has to increase. And so for us, like, we wanted to strike this balance of the fund is growing in value, the token supply is decreasing in value, the backing value of tokens is going up, and therefore the value of the tokens is going up. And the only way we achieve that is if we push almost all of the capital we collect from presale into the fund itself, into the protocol. So its backing value is almost truly 100% from the moment we go live. And so that's the way we achieve that from day one moving forward, is we achieve that deflationary nature by making sure that as a team, we're not misusing or mishandling capital that we collect. That's why we self-funded the entire build. That's why all of the money that's being collected, 96% of it's going into the protocol. And that's why, as a team, there's no team tokens, and we're participating in the presale itself. In fact, this is the little alpha for everybody. When I invest, I'm doing $25,000 into the presale. I will post the transaction link so people can see it. People who are part of MDB already know my wallet. It's not a secret. It's never been a secret. And so it's just something from a transparency standpoint that people know, like, we are invested alongside, and we have the same risk profile as they do. We have the same exposure to the protocol as they do when it comes to potential losses or potential gains. And that was a very clear decision from the very beginning. So STS is the mother token of the protocol. That is the token in which all revenue and volume will flow through to dictate the health of the protocol overall. Now, there is an ancillary token called STS Plus, which is a fork of XUSD. XUSD was created by the Xsurge team. It's a very simple but very helpful token in the sense that it helps you protect against market downturns. And so what that is it's a fully collateralized token. For us, it's going to be USDC. So USDC will be our backing collateral for the token. And so what happens is every time there's a buy, a sell, or a transfer, 1% is taxed on that activity, and it folds back into the contract, causing the existing tokens to appreciate ever so slightly. So over time, through volume, the tokens will have their own, what I call APA, annual percentage appreciation. Sometimes people will call it APY, but that's a misnomer, because you're not yielding anything. You're not getting anything in return. You're actually just having your tokens that you currently hold appreciate. And so what we did is there's the passive utility for this token, which is the farming. Like, you pair it with STS and you put it in the farms, which is great. It helps it appreciate a little, but we wanted to create an active utility. So we made it our take profit part of our dynamic strategies, which we can talk about dynamic strategies later. but what that is, it created an active utility, which is actually going to enhance the earning potential, the potential APA on the token itself by having this active utility where we're pushing more volume through it, which has that 1% tax, which folds back into the contract, which causes it to appreciate. So it's kind of a perpetual motion of sorts. So those are the two main tokens of the ecosystem. Those are the ones that are going to dictate overall what happens as money and capital moves through the protocol itself.
Cool. And so a temporary DPEG of USDC wouldn't change anything about STS Plus, right? Since it's simply going to be redeemable for underlying it, based on ratio.
Yeah, if it was a temporary DPEG, you would just wait for the repegging. Obviously, there's always that risk, right? Like we were talking about before. Like if your L1 fails, then good luck with your project. That's the compromise we come to when it comes to relinquishing some control. And so for us, we had to pick which stable coin we wanted backing STS Plus. And through that process, we talked about USDC, we talked about USDT, we talked about TUSD. There were several conversations, but we always kept coming back to USDC because we felt like despite recent hysteria, like it is still functionally and probably from a regulation standpoint one of the safest stablecoins to have associated with the protocol. I have continued conversations with the Circle team directly, trying to get some sort of like public association, because we want to make sure that we're building bridges to as many bigger teams and protocols as possible. But at the end of the day, we felt like this was our most secure way to collateralize STS Plus, was to use USDC. So if it were to depeg temporarily, it would have no impact long term on somebody who holds STS Plus. If they were to redeem STS Plus, they would get X amount of USDC back according to the price. Obviously, the price would actually dip a little because its backing value has dipped a little. But if it's temporary, then it'll come right back. It wouldn't be something that we would worry about from like an actual structural integrity of the protocol.
Yeah, makes sense. So you'll have LP incentives for STS and STS Plus, it sounds like, and you mentioned single staking as well for STS. Oh, and before I forget, will STS be redeemable for treasury at any point? Yeah.
So in its truest sense, STS is a share of the fund, share of the treasury, and so you would be functionally redeeming part of the treasury for STS when you trade it for either Matic or STS Plus. So from our point of view, that's how our users are interacting with the fund, through that medium of exchange. I always make the joke about like if you wanted to own a part of Apple, the computer company Apple, how insane would it be if they handed you a deed to an office on the third floor of their headquarters and said, "Here you go. This represents your ownership in Apple." It would be incredibly cumbersome. It would be impossible to manage, and then it would be very illiquid. And so they create a medium of exchange, right? Every company does. It's, they offer stock, and that represents your ownership in the company. And so for us, our tokens are our shares. Our tokens represent people's percentage proportionate to their holdings of the mutual fund. That's why we wanted to make sure that as much money as possible went into the fund right away. And so for us, them trading STS for Matic or STS for STS Plus is them interacting with the fund through the medium of exchange. But it's our job as a team to make sure that the liquidity is healthy, that we don't accidentally make a honeypot. Like, for example, you should have a liquidity that is at least 10% of your market cap. 15% is even better. You have some projects where you'll see it be 2% or 3%, and there's so much price impact when somebody tries to buy or sell that it becomes functionally a honeypot. And so obviously we want to avoid that. But ultimately, that is their way of interacting with the fund, which is through the token, and we'll be interacting with them from the fund through the token as well, because revenues will flow through through the token, either because of appreciation through the purchasing power increasing, or through those yields on single staking and farming.
Yeah, that makes a lot of sense. So, so the taxes are fairly high, and that seems to be the ongoing revenue source, right? Is through taxes and token trading volume. So just would you talk a little more about that? I'm curious, how you arrived at that model, and and if you think the taxes will scare anyone off.
I think if we're honest with ourselves, the taxes will probably scare some people off. There's some people who see taxes on a token and they're just immediately like, nope, no, thank you. And that's fine. Like, we're not going to capture everybody. And like, there's some people who are kind of purists when it comes to that. But the taxes represent the management and performance fees, just like a traditional mutual fund, your MER. The taxes on our side are our MER, functionally. But the key is unlike a traditional mutual fund, the users of the protocol will see half of that come back to them. And so we used Make DeFi Better, MDB, as a proof of concept. They've been live for a year. Despite all of the troubles with Terra Luna and Celsius and FTX, and their own personal, little missteps with certain investments and Infinity, despite any of that, they're still up 500% in 1 year. In a terrible market, and frankly, they were experimenting, and we thank them for that experiment, and we think they did a great job. And with Foxify coming, we think MDB's future is secure. We think Foxify is going to be an incredible trading platform. So we're happy to continue to be heavily involved in that protocol as investors. But we saw opportunities, right? We spent a year observing the protocol. We saw opportunities to find different ways to alter how certain mechanisms work, how we collect fees, how we collect revenue, and then ultimately launching in a better macro market. And so for us, our buy and sell tax is about 40% lower than theirs. They do 10% buy, 15% sell, 25% total. Ours is 5% buy, 10% sell, which is 15% total. And like I said, the way our taxes work is 50% of them go back to the users of the protocol. So anyone who's single staking or anyone who's farming will see 50% of those taxes be returned to them in their token APY. And then another 10% is burned. So that's one of the ways where we keep pushing the token supply down is we have part of that automated within the actual tax receivers. And then a minority percentage, 40%, comes back to the treasury. And so on one tax receiver, it comes back in STS tokens. The other tax receiver, it comes back in Matic. So there's a little bit of sell pressure when that tax receiver triggers, but we made a way in order for that sell pressure to be lower than our proof of concept. So MDB, it's about 73% when the tax receiver triggers, it'll sell for BNB and then push back to the treasury. That's a decent amount of sell pressure. And so what we did is we wanted to lower that fixed sell pressure. So we found a way to lower it to 40%. So reduced it by almost half. And then we collected additional blue chip revenue from how we manage the features, and specifically the farm withdrawal and deposit fees. And so, but a majority of our revenue is going to come from the mutual fund. So like if we hit our hard cap, we project roughly, 35,000 a month in revenue from the mutual fund itself, probably another 15 to 20,000 from protocol revenue coming back to the treasury. And so a majority stake of revenue is going to be coming from the fund itself. And then the protocol provides an ancillary amount of revenue. But again, 50% of all of that gets pushed back into the users of the protocol themselves.
Yeah, nice. That makes a lot of sense. So good. Now, and speaking of people taking profit, should we talk about dynamic strategies for a few minutes before we move on to security and then on from there to fundraise?
I would love to talk about this. Is actually my favorite thing to talk about within the protocol, because a lot of people ask us, like, "Are you just a fork? What are you doing differently?" And while we honor them and we love what they've built and we continue to be engaged with it, we wanted to do something different, right? We wanted to add to the space. We wanted to continue the trailblazing. And so my observations of the space over time, I saw a lack of personalization. So every staking farm and yield farm in existence, you are standardized. You can only earn one way. If you stake ETH, you get paid in ETH. You stake Matic, you get paid in Matic. You farm BNB and Cake, and you get paid in Cake or whatever it is. Like, they're all standardized. So despite every investor having their own spectrum of risk management, their own spectrum of portfolio management, they are forced into these standardized earning potentials. And so for us, we wanted to find a way to build an innovation on top of this set practice within the space. And so what we did is we came up with dynamic strategies. So whenever rewards trigger, and rewards are based on volume and they're variable, so we don't have epochs or guaranteed APYs or anything like that. Like, we want to make sure we're as sustainable and well taken care of as possible. But when rewards do trigger, what happens is you, as a person, as an individual, and every individual in the ecosystem can do this, you can set and automate exactly what you want to have happen to your rewards. So there's 3 choices. You can compound, you can accumulate, and you can take profit. And then on the farming side, within your accumulate percentage, you can actually choose to designate that percentage to go directly into your single staking automatically. So it'll automatically compound into your single staking, which again will earn its own rewards. And so you can set those 3 in increments of 10%. So we have a shorthand for this in the community where you can do a 5-0-5 strategy or a 4-4-2 strategy. And what that means is 40% compound, 40% accumulate, 20% take profit. And that take profit is in STS Plus. And that's the active utility that we talked about before. And we can discuss that more. But what this does is this allows every individual user to choose how they want their rewards to be managed. And this is a way to automate their portfolio management. And the key is they can set it and forget it. You could put $10,000 into the farm with 50% APY, set your take profit to 100%, walk away for a year. When you come back, you'll have approximately $5,000 in USDC backed STS Plus sitting in your wallet. Passive income that's actually passive. Or you can change it every day. So as market conditions change, you can change your strategy. You can update it within the system. And then every reward cycle that happens after that, it will manage it that way. And so the key is it's your prerogative. It's your choice. And so we spent this whole time building this project in the dark because we kept asking ourselves, how much control can we hand back to the user? How much control can we give them without compromising the structural integrity of the protocol? And so we came up with dynamic strategies as one. And then the community themselves, a community member named Tesla Maxi, shared another idea that was right in line with this ethos. So we have 2 farms, and one's the Matic farm, one's the STS Plus farm. And Tesla said it would be great if there was a way for people to move between the farms. And I read that and I was like, that's a great idea. And so I went straight to the developers. I told them the idea. I was like, here's what I think it can do. And because we already had it set up in a way that was conducive to this idea, it was like 2 small adjustments to the farm contracts and then 1 intermediary contract to execute the movement. So we are able to post or pre-launch, before pre-sale, before protocol launch, we were able to implement this what we call internal farm migration. And so basically what you can do is, instead of manually moving farms, so let's say you withdraw from the farm in Matic, and then you make and break your LPs, and then you move into the other farm. That's 8% in fees if you were to do that manually. It's fee heavy. We were trying to avoid that. And so if people choose to maintain capital within the protocol, they can migrate now between farms for a 2% fee. It's almost like a Zap function, but it's them migrating from one farm to the other. And the nice thing is because making and breaking LPs are tax exempt, which means you can make and break LPs directly on the DApp. You don't need to go to a DEX. This gives people an opportunity where they can just one-click move from one farm to the other. They can customize their experience. Again, they can make that choice, and it has no impact on the protocol overall. So it's another way that we can hand control back making sure that the protocol was taken care of. So between dynamic strategies and this internal farm migration, we found ways that we could allow people to customize their experience. And through that, with no locks and no timers, we hadn't talked about that yet, but with the added feature that we don't have any locks or timers in the protocol, people can literally choose to do whatever they want within Stasis, and it's always their prerogative.
Yeah, very cool. That's a fairly flexible way to take profit or to stay, and it should also create some extra volume for STS Plus, it seems.
Well, and the nice thing is we have an arbitrage bot running all the time. So it basically links the two liquidity pools. So our two liquidity pools get to functionally act as one, because the arbitrage bot is always maintaining parity between the two pools. And so what I tell people is take profit. For the love of God, take profit. Set some percentage for take profit, because it's good portfolio management, and it pushes volume through the protocol, which pushes rewards through the protocol, which pushes taxes, which pushes burns. You're literally, as an individual user, you are helping maintain the health of the protocol by ensuring that some percentage of your dynamic strategies is set to take profit. So we tell people, every one of you, set some percentage, even if it's 10%, even if it's 20%, whatever it is, set some percentage to take profit, because you're literally helping the protocol stay healthy by maintaining volume running through it. And so that it might seem antithetical to DeFi, where people are like diamond hands and don't ever sell. Like, it's the opposite for us. On us, and the way we do that is we ensure that everybody is managing their portfolio as responsibly as possible.
Yeah, that makes a lot of sense. Right. If they're taking profits along the way, theoretically no one ever needs to dump.
Yeah, I mean, people could put their take profit to 100% and never compound and never accumulate, and they still would be doing the responsible thing as an investor and helping the protocol maintain volume running through it. So it's a win-win for both the protocol and the user.
Yeah. So good. Well, let's talk now about security. So do you have plans for an audit or bug bounty?
Yeah, so the audit should be done today or tomorrow. So this is one of the things that the team and I were talking about, was we feel like we've done more pre-sale than almost any DeFi protocol will do for their users 3 months post-launch. So like the product's done, all the documentation is done. We have all of our marketing, all of our different social channels up and running. Our audits are going to be done today or tomorrow. Everything's going to be tested. Literally everything's done before we collect anybody's money. And so our audits are being run through Solid Proof, and that's going to they are the same company that audited MDB, so they know the developers well, and they know the code well. And so that should be done today or tomorrow. And then we plan on, at some point, as we add features and we build out a more Web 2 experience with our later roadmap items, having more like bug bounties and like little hackathons and stuff, and like little pen testing. Like, that's something that we want to do anyways, just to make sure that we're safe. But the nice thing is it's a simple protocol. There's not a lot of contracts and there's not a lot of functions. I think, counting the pre-sale and NFT mint contract, I think we have total of 23 contracts in the whole protocol. So naturally, our attack vectors are small. Our opportunities for people to find holes are small. I think we have some of the smartest developers in DeFi, especially when it comes to Solidity. And then obviously having it audited, and there's another company that we're working with called Solidity Scan that we want to use to scan our contracts, like either daily or weekly, to ensure that nothing has changed, there's no issues, and that basically everything's copacetic. And so that from a security standpoint, the simplified mechanisms, the lack of significant amount of contracts, the lack of attack vectors for people who are looking to exploit it, I think ultimately security is always going to be one of our top concerns. But I think also, because the protocol itself is simple, security becomes inherently much easier.
Yeah, very cool. And it is great to hear of someone launching with a product done.
Yeah, that was something that when we started this process, how often, which is almost all the time, will a, a project launch with a white paper, collect their customers' money, and then use their customers' money to build the product that they want their customers to use their money within. And so really what you're doing is you're kneecapping your potential revenue streams right off the bat by using your customer money to make the product. And then you're kneecapping your treasury or at least your runway by 30 to 50% because you spent 30 to 50% of the money you collected to build the product. And so for us, we wanted to treat it like a business. We wanted to treat it as if this is the real world. In the real world, unless you find biz dev people to help you get a loan or to help you fund the construction and build of a business, you have to use your own money. And so in every sense, we wanted to make sure that the company and the business, even our parent company, set up and operational before we went public, our terms of service and our privacy policy written by our legal counsel in Panama, where our parent company is operational, in place before we go public. All of these things, these little pieces of the puzzle, that attention to detail, we hope people will look back and go, they did it right. And with the no locks and no timers, with the no team allocation, with the building the product before we collect funds, everything that we've done, we hope through time we can set a bit of a standard for how investors and people in the space expect future projects to act.
Yeah, that would certainly be exciting. So now we should get on to the fundraise. Tell us about the pre-sale and how much you're targeting and so on and so forth, please.
Yeah, so obviously we're gonna be fairly aggressive with our hard cap. So our hard cap is for tokens 2 million, and then with the NFT mint that would bump us up to 2.4 million. And so at that point, 96% of the capital would go into the protocol, whether it be liquidity or the mutual fund itself. At 2.4 million, we'd hold back about 100,000. Truthfully, because I have a team that has back pay. So myself and Barry, we are withholding any recovery of expenses for ourselves. We like I said, we believe in the product. It's just like a business. You open in the red and you hope in a few months you'll be in the black, or 6 months or 9 months you'll be in the black. And so but at the same time, we do have a team that has been working diligently in the last 3-4 months. So a little bit of that that will be held back will be back pay for some of the team members, and then making sure that they're 100% taken care of. And then, but 97% of the capital goes into the fund. And so people asked the other day, like, well, what if you don't hit hard cap? I go, nothing changes for us. Like, our operating expenses are incredibly low. And so even if we raise 1.5, the mutual fund runs as intended. Our expenses are still well below what our projected revenues are going to be month after month. And so, and then if we don't hit hard cap, we have an opportunity to take some of those tokens, burn them, reduce supply significantly right off the bat. And then we can also hold some in reserve to onboard people via OTC if they want to come in as a larger investor. So if someone wants to come in 10, 50,000, whatever it might be, because everything's backed, because the money that they would be bringing to the protocol is going to be injected directly into the fund and a little bit into the liquidity to make sure that our ratios stay healthy. Nobody is diluted in value. And so because the tokens represent the shares, and if the shares are backed by the same value before and after an OTC like that, everybody is taken care of. It's a win-win for everybody. The mutual fund gets more capital, so we can engage financial economies of scale. The larger the bucket, proportionately, the larger the rewards. And so we have an opportunity that if we don't hit hard cap, we can find ways to continue to grow the fund. We can find ways to continue to onboard people, and then ultimately we can just continue to build out this ecosystem. So tokens 2 million, NFTs included 2.4. Launch price is 1 cent, pre-sale price is 1 cent. So this is 100% fair launch. There's no free tokens to be had. Every token will be accounted for pre-launch. And then, like I said, the team ourselves are all participating in the pre-sale. So someone asked me yesterday, they're like, well, what happens if nobody buys pre-sale? I was like, well, that's sad and I don't want to think about it. But there will at least be $100,000 in pre-sale from the team, because that's what, I think projected wise, the team ourselves will probably put close to that amount into the pre-sale ourselves. And so it would just act as like a little personal mutual fund for the team, I guess. But ultimately, we don't think that's going to happen. So, but those are the numbers roughly for what we want to do raise wise. And then hard cap hit or not, we have mechanisms in place and procedures in place where we run the protocol in an efficient way, and we start the process of burning supply, growing the fund, delivering sustainable passive income to all the users who are involved.
Yeah, nice. I like that a lot. That it works at any size, and that it can just be a personal fund in the worst case. That's a great approach.
Yeah, the idea is to be able to be scalable. Like, obviously, if we hit our hard cap, we would need to collect tokens in order to be able to onboard, like, say, an institution or something. So if somebody wanted to bring in $1 million at launch, obviously that would be illogical, because our starting market cap is like 2.4 million. But in a year or two, and if the fund's at 10 or $20 million and the market cap's at $30 or $40 million, and somebody wants to come in with $500,000 purchase, we could actually facilitate that. It would just be a matter of finding the most efficient way to inject that capital into the fund and into liquidity, and onboard them in a way that isn't too disruptive to the rest of the users. So, but because it's a mutual fund, and because we're talking about shares, we can collect shares and then distribute shares and use that exchanged capital to inject into the fund itself. And so it is a nice, elegant way to be able to ensure that we find different ways to grow the fund besides just reinvesting revenue every month.
Yeah, very cool. That makes sense. So, and then how can people participate? When does it start?
Yeah, so pre-sale is June 9th. Everybody who's listening can get a whitelist allocation. So we have 2 different whitelists, and then we have public presale. So public presale is kind of a dark horse. We don't really know what to expect, but we hope that it brings in a good chunk of capital. So Alpha Whitelist is a $25,000 cap. That's what the team has. That's what some of our private investor networks have. Last checked, I think there's about 110, 120 people registered for Alpha Whitelist. Naturally, those people aren't investing $25,000 total. Like, I would anticipate somewhere in the range of, 2,000 to 10,000, somewhere in there. But the numbers are looking good for whitelist registration. Then there's the beta whitelist, which is a $10,000 cap. And anyone who completes 1,000 XP on Zeely within our Discord server will automatically qualify for beta whitelist. And so the way this works is Alpha gets a 2-hour early access to presale, which is 1,800 UTC. And then beta whitelist will get 1 hour early access to presale, which is 1,900 UTC. And then public presale is only a $2,000 cap per wallet, and that's at 20 UTC, which is 4 p.m. Eastern, 1 p.m. Pacific, if you're in the United States. And so that's when presale starts. Presale will run for 72 hours, or it sells out, whichever comes first. And then on June 11th, we will do the NFT mint. So we have a special sale for our rare NFT collection within the collection, and then we'll do the NFT mint after. Both the presale and the mint are on Polygon. Stasis is on Polygon, and we're doing both the presale and the mint in USDC. So we had it originally scheduled for Matic, but a number of the community members asked if we could do USDC. And since we aim to please, we are doing it in USDC. So that is how you're going to participate in the presale. June 9th, 1800 UTC is when everything's going to kick off. And you would need USDC on Polygon. And then we hope everybody who's listening comes and participates.
Yeah, very cool. Well, good, and we've screenshotted everybody who attended. So yeah, we'll figure out how to get those whitelists to everybody.
Yeah, the easiest thing for whitelist, if you want to come over to the Stasis Discord, open up a ticket. We will take care of you. We'll make sure you get put into the whitelist and all set up and ready to go. We'll just need to have that done by June 7th at the latest. So we have time to reconcile the lists, make sure there's no redundancies, and then get them over to the developers for getting ready in the CSV file to get ready for presale. So, but yeah, just come to the Stasis Discord, open up a ticket. We'll get you sorted for a whitelist allocation.
Yeah, excellent. Well, great. Now, if anybody has any questions, please raise your hand or feel free to chat them at us in the chat up to the right.
Oh, I see. Cato asked, "What's the benefit to early access?" Basically, alpha whitelist gets to go first. Beta whitelist, alpha whitelist has a higher wallet cap, gets to go first 2 hours early. Beta has a slightly lower wallet cap, but higher than presale, gets to go 1 hour early. The key for us is it's a fair launch, right? So I always ask people, do you want fair or do you want an advantage? Because every presale I've seen where the tokens are deeply discounted for a seed round, they just dump on everybody that came before them as soon as trading starts, and they move on, and so we obviously didn't want that. We have marketed and structured Stasis as a long-term experience, a long-term investment for our users. So offering any other advantage aside from the fact that you're early, you don't have to pay the buy tax, which is 5%, and you don't have to experience any price impact. So if you want to buy $25,000 in Stasis at 1 cent, you can do that. The price doesn't move like it would on the open market, and you don't experience the 5% buy tax. So something to consider for people who are looking to get into something where, like I said, the mechanics are proven. We know that this system works. We lowered the taxes and changed the way the fees are collected to enhance its overall mechanisms, and we're launching into a much healthier macro market. And I think ultimately people are looking for something to diversify into. In bear markets like this, one of two things happens. You either become very centralized in your portfolio, like a lot of your capital is located in just a few protocols, or you have a bunch of dead projects and basically you have a lot of sunk cost associated with your portfolio, which can drain your mental health, which can kind of drain you as a person. And my message to a lot of people is assess what you hold. Not everything's coming back. You might need to close a few chapters to open up some capital to take advantage of a new opportunity, which is Stasis. And it feels like a lot of people are starved for a new opportunity. And I feel like because of that, we're launching at just the right time.
Yeah, it does seem like a great time. Very cool. M4R5T asks, what happens if you mint a Valkyrie's Vanguard NFT?
So we have 7 clans within our Stasis Viking Collection NFTs. And one of those clans is an all-female Viking clan. As you can imagine, in a community where a vast majority of them are men, it is a very popular clan. So it's so popular to the point that we uncovered a bit of new alpha and lore about this particular clan, and we wanted to make sure that it was taken advantage of. So we try to add a little fun because basically mutual funds are super boring. So we wanted to add a little flair for the protocol. That's part of the reason why we have an NFT collection. But essentially, the Valkyrie's Vanguard is They're very fierce. They can stand toe to toe with any other clan, and they've been blessed by the gods with an uncanny luck attribute. So throughout their history, the Valkyrie's Vanguard, they've uncovered many riches due to this trait and consistently are unearthing long forgotten treasures. And because of this, if you hold a Valkyrie's Vanguard, not only do you benefit from the set passive income from holding one of these NFTs throughout the whole collection, but if you hold a Valkyrie's Vanguard, you also get monthly additional airdrops that boost the APR for holding a NFT a little bit more. So there is an advantage to finding or minting one of these particular clan Vikings. So when we do the mint on June 11th, anyone who mints a Valkyrie's Vanguard, the APR for that particular NFT will be higher than the rest of the clans. So it's something to keep in mind.
Oh, fascinating. And will the whitelist people also get a slight head start on the NFT mint?
Nope. So the NFT mint is public. So there is no whitelist for the NFTs. However, there is a 3 NFT cap for the first 30 minutes. So naturally, the NFTs are attractive because not only are you paying for the artwork, which is amazing. Ian, our marketing director, spent like a month and a half making the artwork. There's like Stasis branding embedded in the art in like 40% of them, where it's like a Stasis logo or a guild tattoo on the skin or something. And so you're paying for the artwork. We have a bunch of plans for gamifying the clans in the community later on post-launch. There's some benefits for the rare NFTs where you have some opportunities to advise and have certain roles within the community. And then there's tokens that partially back the NFT that pay you out weekly. So as we burn supply, tokens will leak out of that contract and then go to the NFT holder. So if you hold an NFT, not only do you get all the non-monetary benefits, you also get passive income simply from holding them. So it's kind of a win-win. So if you're into NFTs and you're into passive income, you get the best of both worlds. But the Valkyrie's Vanguard is going to be just a little more lucrative if you were to mint one on June 11th.
Oh, cool. Great question, and thanks for sharing the alpha.
Yeah, the NFTs are something that the more you hold, the more passive income you get, right? And so I always tell people, like, if you have a limited bankroll, focus on the tokens. If you're purely focused on maximizing profit, focus on tokens. However, the NFTs are a great way to both earn some passive income and have other opportunities within the community when it comes to special bonuses or special airdrops or extra non-monetary benefits within the community. So it's kind of like an ancillary feature that I tell people: limited bankroll, focus on the tokens. But if you want to participate and maybe mint a Valkyrie's Vanguard, June 11th, hold back. The main NFT mint will be $600. There are 700 total. We have a 3 NFT cap that we'll have on the mint for the first 3 minutes or first 30 minutes. So anyone who wants at least one can get one. And then after the 30 minutes, we'll pull the cap. And then if anybody wants to hoard a bunch of them, they're more than welcome to. So that is their prerogative.
Yeah, fascinating, all of you. I look forward to seeing you guys launch and seeing what happens. This will be an interesting one to keep an eye on.
No, I appreciate it. And like I said, if anybody is interested in a whitelist, please come to the Stasis Discord, open up a ticket. We'll take care of you. Otherwise, June 9th, even if you don't have a whitelist, we have public presale. So tell your wife, tell your kids, tell your extended family, tell the guy at the office. You might want to check out Stasis Network. So the more people everybody tells, the more capital we can accumulate during the raise, and we can launch even stronger. So anybody who's out there listening, share with your networks. Let them know we're coming. Everything's done. The whole product's built. We're operational from day one, and we're looking forward to getting this off the ground.
Yeah, very cool. Well, great. Well, thanks so much for joining us, Patrick. It's been a pleasure talking to you and learning more about Stasis. And thanks everyone for attending. This has been another DeFi Raiders AMA. I'm Dejanic. And yeah, we'll see you all next time. If you're watching this on YouTube, please like and subscribe.